In this short video, and as a follow-up to a previous video that looked at approaches to improving win rate, in this session, we're just going to look in some detail at approaches potentially that may help average win and average loss. Of course, it's a combination of average win, average loss, and win rate that created that overall profit loss situation. So I hope this will be useful. Use it as a checklist, use it as a way of creating a plan to make your results that much better. Let's start with an overview and some assumptions. Obviously, if you want to refine and improve results, a robust system of recording must be in place, and this must measure metrics such as win-loss rate, average win, and average loss, as well as the overall PL. Really critical point is that the quality of your results is dependent on how well you execute your system. Without following your plan, any results that you obtain through partially trading your system are going to be relevant in terms of system performance. Certainly they have relevance for you performance, and perhaps you need to do some work either on increasing the belief you have in your system or, of course, become more disciplined generally anyway. And of course, one thing we raised in the previous video is that there will usually be a payoff. If you tweak one issue, it may result in a change in another metric. And this is fine as long as the overall result is improved. That being covered, let's move into more detail and look at how we improve average win and loss margins. We can do this in two ways. We can decrease the amount of average loss more than you decrease the average win, or conversely, we can increase the amount of average win more than we increase the average loss. So we're going to look at both of those and just give you, as I said, a few things to consider and test out in your trading. Let's start with decreasing losses more than we decrease wins. So if we enter at a lower price, so any loss that we sustain is less, by potentially using limit orders or perhaps bounce strategies, and perhaps place these not at support but away from support just a little bit with evidence that something has bounced already. So potentially use a reversal pattern, but also give it maybe an ATR over that support it's just bounced off to suggest that the probability of that bounce continuing is increased. You can possibly look at less candles before you take action. Some strategies use a bar count after an event. So, for example, we may say, as long as this trend continuation is in place after 8 candles, we're happy to gain a trade. Although we might decrease the number of trades, to tighten the distance between a setup being about to happen and then it happens would often result in less losses. We could exit earlier so our loss is reduced, and we can do this through either tightening our stop criteria, and of course, we've got to balance this with the danger of being taken out by noise, and also explore variations on trail stop approaches sooner after entry. So, for example, we could trail with a moving indicator based price or momentum rather than specific trading levels. And of course, we can also lock in some partial profit. As soon as we do that, then we are automatically reducing our average loss by locking in some win. We could look to earlier time exits before more damage is done, particularly in times where we know that there is going to be an increase in volatility, particularly during new sessions that open. So, for example, when the US session opens, we often see significant volatile price action. And certainly before event or data release happens, we can look at potentially exiting earlier or again partially exiting just to protect some of our profit that we have rather than seeing it all disappear. It's really important when you look at anything like this that you're open to new possibilities. Don't let what you've done previously dictate what you're going to explore going forward. So anything, not only from this session, but any other sessions that you hear about, just take everything on board and consider what's the next thing for you to test right now. If we're looking to increase our average win, we could look at entering a lower price so our win is increased. So we could work hard on limit orders and bounce strategies based on probability testing. So tying in with what we said previously, so not only is it about giving space, but it's also about having clear, unambiguous statements. The other possibility, of course, is to exit at a higher price so our win is extended. So potential approaches we can use to achieve this aim is decrease the sensitivity of trail exits. So close beneath the EMA rather than a touch or a long period MA. And we often see that a wick will go beneath an EMA only to bounce back up. So by operating on bar close only, it may offer you a chance to look in some further upside. Obviously, we can remove or loosen criteria of our take profit so we can look to a 4 ATR multiple rather than a 3 ATR multiple from entry price. Again, you can test this out for yourself, and the best way to do this is that what if scenario that we mentioned in the previous video. Look at trades that you've taken previously which have hit a take profit and ask the question, if I'd increased that profit level by this defined criteria, would it have made a difference to our average win? We could use alternative signals. So rather than set a take profit, we could use a pause or reversal as a way to get out rather than a take profit. Now, there are dangers with this, of course. What we're doing here is we're saying these are alternatives, go and test them out. Through not having a take profit allows that further run up. The exception to this may be if there's a specified previous level of resistance in a long trade, which can obviously be a reversal point in itself. We can look to exit earlier before more profit is given back, of course, and this would be to increase the sensitivity of our trail exits. So we can do things like look at a touch or a shorter MA. The other potential is if we do get a bigger gap between current price and where our trail is, we could say, right, okay, what we're going to do now, because there is that distance between current and trail price, after this big move, we're going to decrease our 20 EMA trail to a 10 EMA trail. But again, we'd have specific criteria by which that would be the case. So it might be that if the distance is in excess of 2 ATR, then that would be the trigger for tightening up our trail. We've talked about that in previous videos when we've looked at trail stops. If you look back at the trades you've taken and you see that perhaps your take profit isn't hit very regularly, it might be that you're being too enthusiastic about where you place your take profit. So again, perhaps reducing this on a test, the what happened if scenario. So if I'd reduced it from a 4 ATR multiple to a 3 ATR multiple, would it have produced a better result is very well worth doing. Bear in mind, of course, that this may differ from instrument to instrument and time frame to time frame. And of course, we could use price action exits rather than lagging indicators. So if we are using a lagging indicator for trail, which we often do, often it's an ATR or a moving average, these are both lagging. We could either tighten those up or perhaps look to use pattern reversals rather than a trail to get out. All of these are potential ways in which we can increase our average win. Now, what you need to do is you need to dictate your own sequence depending on what you see on the chart. So, what I mean by that is the best way to judge this is to not only look at the trades you've taken from the numbers, but physically go and have a look at the charts as to when those trades were actioned. Additionally, what you would do is you would say, right, I'm going to look at this thing first, I'm going to look at this thing second, I'm going to look at this thing third. My guess is that you'll already have some ideas about where it is that you're giving too much away, or how perhaps you're delayed a little bit in your entry, so you're entering a higher price than you would probably desire. Looking at charts is probably the best initial way to see what you can use to improve results. So again, your actions from this is to consider the content in this session. How do you think it may contribute to your trading? Do you think there's any of these that seem to resonate from some of the results you've been seeing? Of course, subsequently, you need to take some action. If you're making the choice to create a better trading future, it always is on the back of having a plan on what to have a look at and how to have a look at it. I hope this video has given you some points to consider in that quest. Trade safe and see you again soon. Bye bye for now.